Bitcoin put in a new all-time high 26 days ago. That was $17,000 higher at 124,000. Now, since that time, it's been struggling at $112,000. That's our first safety level for Bitcoin to change the trend from this downtrend into an uptrend. The next levels we'll discuss in today's video, along with some of the breakthroughs that are happening in other markets, some of the altcoin markets. Hit the like, subscribe to the channel if you're new here. I'll be covering the macro cycle analysis across Bitcoin, cryptos, the stock markets, and the real estate cycle. Okay, Bitcoin's update from this point, struggling at 112,000. We've tested it once, twice, 3 times. Hopefully we get a breakout on the 4th time, according to Gann's 4th time breakout rule. Now, if that happens for the bulls, consolidation above 116,000 is the first level, being above the 50%. That would then flip things more so into the bullish stage, bullish phase of the cycle again, and away from this short-term bear market. Now, if it keeps struggling here, getting rejected at 112, 114, maybe even 116 if it is able to break and then get rejected, it just increases the likelihood that it will come back and test this low zone between 107 to around $110,000. With that test, then we have to look for further downside. So somewhere around the 105 or the 50% level, psychological level as well, around that $98,000 to $100,000. Now, this has all been part of the move that we've been discussing, looking at the weekly chart, the 3 red weeks right there, 3 down weeks. Don't get confused. This is a lower price here, just by a few bucks. They're lower highs, lower lows. So technically that's a down week. Lower highs, lower lows. The market's gone down. May have closed in the green, but overall it went lower on the lows and of course on the highs. So 2 of these signals here that we have discussed recently, looking at the weakness in the market due to these particular signals. So they are yet to be invalidated. Invalidation would occur with a break above the all-time highs. And in terms of the slowdown effect from these signals, this could just mean, again, part of the consolidation that we're expecting for this period of the market, looking at that Q3, which then leads into a stronger Q4. Historically speaking, from our cycles, looking back at 5 and 10 years, it's basically been the same sort of thing that we've seen throughout the entire year of 2025. The market came into a top, it ran down into a solid low, March and April. Looking back again, this is a 5 and a 10 year cycle, and it's rhymed very, very well. We got to another peak here, roughly August, and then of course it's faded from that point. It is basically stalled out, and those signals are telling us that it's probably going to be a little longer to consolidate the move before we get to that breakout point. Now, there can be a breakout here probably, or could be, late September, early October. It looks like the significant move really gets going sometime around mid-October. That's just according to the cycles if we keep following a very similar path to what happened 5 and 10 years ago, combining those charts, combining those price movements through the cycle analysis, and then up into October, possibly November, and December also looking pretty good. Now, if it happens to be a crash to the downside, as I said, 98 to 100K could be a good looking area here. Maybe a double bottom forms and we get a nice fast move away from that. So if there was a rejection between 112, 116, and we came back down, we want a fast move away from wherever that low forms. If it forms between 98 and 100, great. If it's slightly higher, so be it, but we want a fast move away. That's the main thing I want to take from this. And overall, with the analysis day to day, it's pretty slow going at this point, and the main thing we want to keep watching for, at least the way I do my analysis, is to see if there are any signs that this cycle is changing or this cycle is different. Of course, day to day, look at the action here on Saturday and Sunday. It didn't really go anywhere. Went down, came back up, down, sideways is the same sort of thing. What we're looking for is, are we seeing a change to the overall structure? Are we seeing a change to how the traders and investors are treating this market? And so far, basically all of the indicators that we're watching continue to play ball. They continue to show very similar patterns to last time when we saw corrections in the market. And the overall view of the market is that we're in a bull market, of course. So there is some discussion that this was the top and the top is in 124K, cycles over. So far, it's far too early to call that. There's not been a breakdown of any of the key lows here, you know, $99 to $100,000. We haven't even seen a retest of 74K. There hasn't been any closes or long-term closes for your weekly charts or monthly charts below the previous highs here. You know, we've run to new highs and the previous highs where there was a lot of extreme greed. You can see right here, tons of greed came into those tops. Unlike these current all-time highs, we haven't seen any closes beneath those levels. And that is pretty evident from previous cycles. That's typically what happens. You'll see extreme greed coming into those tops. And then as the market comes back down, you either get a weak rally or the game's over. And so we saw extreme greed again into these peaks. There it is right there. And the closes in the market came back down, happened to fall underneath the previous tops where the excitement and all that buying activity happened and the sellers started to come in. Now, I've also looked at 3 weeks from the all-time highs. That was something we covered in yesterday's video, and how at each of the significant highs from that point, within those first 3 weeks, there was a very severe move to the downside, and we haven't seen that yet either. So none of the signals, well, the indicators that I'm watching haven't suggested that this is it, that the game is over. When that time comes, or if that time comes from this point forward, then we'll have to change the view. But for now, it's still looking relatively okay. And it seems like the market's trying to buy some time, waiting for the next decisions, possibly from the Fed. We have a few data points coming out this week, Wednesday, Thursday of this week, September 11 there. We're looking at core PPI, core CPI. Of course, this is in my time zone here in Australia, so it'd be a few hours earlier there for the US. And then we have next week, core retail sales. The big one here is mostly the federal funds rate. So what's happening with that interest rate? There is a very strong belief that there's going to be a cut. Maybe you get a double cut and it comes down to 4%. And that could be what the market is waiting for at this stage, basically buying time until we get to that decision, get to that announcement from the Fed. So if it just sort of rallies up and we sort of fall into that into that announcement, that could be a good thing, and especially if the announcement is a cut, considering that's what the market is looking for. So over the next couple of days, you can see the announcement somewhere around here. If we get a test, a failure, comes down into that level and then spikes back up out of that news announcement, I think that's going to be a nice strong play for the short term, and then hopefully develop into something stronger in the longer term if Bitcoin can get back above roughly that 116, 117 at this stage. And should it go a little further, then you definitely want to see this run hard from that low, getting back above 107. These, of course, are just game plans coming forward from this point in the market. None of that has actually occurred, and it's basically been sideways since August 25th. So it's not bad news for the bulls at all. Not necessarily great news for the bears looking to go short. It's basically been a choppy market for the last 2 weeks on Bitcoin, but leaning towards the bullish narrative. It's still on the bullish side because we have not had any breakdowns here. Now, in terms of price targets, I'll chuck these on so we can see where they sit again. I'm looking for the clusters, so don't worry if the prices overlap each other. That's exactly what you want to see. You don't really want to just look for one particular price target that's out on its own. You're seeing a lot of price clusters come in the mid 130s, so price targets around the mid 130s. If this gets going again, we see some pushes to the upside. And then following that, sure, there's going to be some pullbacks along the way. Obviously, it's not going to go straight up. Some people expect that. You get the day-to-day callers here with thumbnails and titles and all sorts, and they think it's up, down, sideways every single day. The point is, if we do get some pullbacks, after the breakout of 130, ideally we start to see it go towards the next price cluster, and that's somewhere around the 160s. So a bit of work to do until we get there, but I thought I'd just throw a little bit of price expectation or price targets, price calls, should we get through those points, throw it in the hopium basket, say for Bitcoin. Now, there's a lot of economic data coming out this week. We've got a few more announcements there. The free economic report coming out today is a link. There's a link in the top of the video description for this. Check it out, have a read through it. There is a little talk of recessions beginning yet again. And if there was going to be a recession, the most likely outcome, according to the numbers, is this year. Because in the first year, number of recessions starting in the year of the presidential cycle, generally they have begun in the first year of the presidency. So that would be this year. Next year is the second year, third year, fourth year. So it's the first and the fourth year, which is 2025 now, and then 2028. So that could be another interesting one leading to the end of our real estate cycle, whereby we're looking for a peak sometime around 2026, potentially late 2025 here for the US real estate, land, home prices, whatever they like to call it over there. We call it real estate here. Property prices, same thing, right? That's the real estate and economic cycle, not the stock market. I think the stock market will continue to push higher and possibly hit some of the targets here that I've given to the S&P 500, to the NASDAQ, to the Dow Jones leading into 2025. And I think they'll hit it in this cycle. So if it's not this year, then it's going to be sometime in 2026. I've got my game plan on here that I posted about in 2025 that I think will hit those targets sometime in 2025. A few of these have already occurred. Bitcoin to hit at least 122K in 2025. Remember I posted about this 2nd of January, and I was putting this together in December, just going through all of my charts and my analysis. We're now getting towards this peak where the US land prices get to their peaks, then begin to plateau and probably start to roll over. That's the national averages, because a lot of the cities you may have already seen have already started to come down in the US, but the other major cities are still pushing to new fresh prices. So check out that report that's coming out today. There's the altcoin report and the Bitcoin report coming out later this week. Now we're seeing a major breakthrough for the altcoin market, looking at the others' dominance. It's taken a long time for this market to close above 8%. You can see the last time others did this, and this is your basically top, well, everything else outside the top 10. Here are your top 10 altcoins, so not including any of these top 10 here, but everything outside of it, led by some of the majors here, like we've seen recently with Hype, some of the other strong stuff here. What do you got? Stellar moving 4%, HBAR 3%, Chainlink 3%, and you got some other major moves here in the billion-dollar market cap, 60%, 270% as well, breaking through 8%. Now, it hasn't done that since May. We have to go back about 3 to 3.5 months to get to that point before the others' dominance broke down, tested a new cycle low. It was roughly a 4-year low for altcoins. And at the moment, we're starting to see those break higher. Literally in the last 24 hours, break above 8%, close above 8%, something that hasn't happened since going back to May. So it's now in the next range between the spike low of February and where that support was around 8.2%. And then the upper range is at about 8.8%. So it looks like it wants to do this relatively soon. And some closes above 8.2% are really going to start to get the fires underneath all of these altcoin degenerates really ramping up. This was the first bar on the breakout. So literally last 24 hours, good moves there for the others' dominance. So basically your altcoin season looking to have a sniff at some bigger gains to the upside. But don't forget, now I'm not trying to take any wind out of people's parties here. It's essentially about taking profits. Whether you're right or wrong, it doesn't matter. All the trading greats have said that. All of the investor greats have said it too. They don't give a shit if you're right or wrong. But I mean, that's what happens in retail trading when you hear people talking about who's right, who's wrong. They're the fools who basically don't make any money. You want to be making money. The game is about making money, not about being right or wrong. So following the charts, watching to the upside, and if it starts to get to these upper price targets around the mid-9s to mid-10s, that's the percentage of the total market cap that the others take up. Watch out for any sort of resistance at those levels. Now, if you start to see some overbalancing to the downside, probably a good time to at least take some profits. You don't have to sell out of the entire position, but probably a reasonable area to take some profits. If it happens to burst back through, well, then you have another re-entry signal using your Swing Pro. You can watch and re-enter the market. That's how the trading works to keep the risk on your side. So now that we've got this first break, good signs there for some of the altcoins. We're seeing some of these things turn green in the last 24 hours, another 10% there on Pudgy Penguins, something we talked about in those reports 2 weeks ago, the altcoin report. Link is in the top of the video description under here, under the subscribe, and you'll get those come to your inbox. So others looking relatively good. USDT dominance hasn't broken down, which is what we want to see this big party of money flowing left, right, and center. At the moment, still holding up around 4.3, 4.4%, and just watching this very closely. Breakdowns going to be good stuff for the bull market. Any breaks to the upside was going to put the brakes on the overall movement of this stage of the cycle as well. Breaking past that 4.8, not a great sign, but we're not there at the moment. 4.4, things are still looking relatively good. And Total 3 also had a short-term breakout here as well. You can see it's just closed above 1.07 trillion. Last time it did that was on this significant bar, or a big moving bar, that is, August 22nd, nice close above there, and it looks like it wants to just push a little bit higher. So some nice closes above 1.09 are basically going to set it up for another test at the highs around 1.1 to 1.16, and that would be putting it into new all-time high territory. So now watching Total 3, watching the others for some significant breakout points here. This was the essentially first day for the others, and Total 3 is just on the verge here of trying to take out that 1.1, get a close above that $1.1 trillion level since the inauguration. So that was around January of 2025, going back nearly 9 months now. So overall, some positive signs here, even if Bitcoin is stalling and slowing and potentially testing some lows again, it's still holding up in a relatively strong position, which has been the view of myself and of the Investor Accelerator, that we're still in a macro bull market. And speaking of macro bull markets, I'll come to this post in a sec. The S&P 500 continues to push higher. Friday had a new all-time high, and yesterday, not a new all-time high close, but it was a small day on the market. It's run up a little bit here and continues to grind, watching our 5-year cycle. This red line in the background goes back to the COVID dump and then the recovery. And we're coming up to the timing of this particular move right there. That's September into October. Consolidation, putting in significant support and then bouncing from that into the end. And that's the timing that we're coming up to here. So whether the S&P is doing that a little bit earlier before it starts to break out, that will be the the next stage. But I haven't thought that this is going to collapse anytime soon, even though we're starting to see some of the economic signs that things aren't that great. I think the stock market still has further to run. Inflation rising, I mean, that's happening. We're seeing that with the PPI. The CPI is coming out next week. And generally they say you got to raise interest rates with that inflation. If we're seeing things go up, put the interest rates up so they can start to bring those prices down. But unemployment is also rising. So they say cut the interest rates, need to get people back into jobs. But asset prices are rising, therefore continuing to add to the inflation. Okay, raise the interest rates. But there are now less jobs being created and leading to more unemployment. Okay, cut the interest rates. And bond prices were falling longer term, short term, we're starting to see them rise. But essentially they have been falling a long time. Raising interest rates, get more people in to be buying the bonds, increase those yields. But we need to cut their interest rates. Not that this is part of the Fed, but of course this is what Trump has been talking about. They're going to do some debt refinancing as well. But you could also relate that to the everyday citizen. They need to possibly refinance their mortgages or their car loans or any other loans, and that's obviously going to help them out as well, especially with inflation rising. So you can see the predicament that the Fed is in and why there's so much talk about interest rates. Things aren't really looking the greatest here long term, but for the markets, we trade the markets, not the economy. The markets keep going up. They're still putting in higher highs, higher lows. This is the S&P. which is leading at the moment in front of the NASDAQ at least. And the Dow Jones has been sitting around all-time highs as well. That white line across the top is the previous all-time highs. It's broken out, it's consolidating, and possibly that next move is going to be higher as well. And then the Russell 2000, also continuing higher, high highs, higher lows, which is your small caps. So you're starting to see this risk on game being played here, and we're seeing it with altcoins as well. Basically, that first initial breakout there for the others chart, Russell 2000 has obviously been up as well, and we're seeing that risk on come back. If the interest rate doesn't get cut for some of the reasons that the market is looking at, then that could be a significant shock to the market. But I think most people are now expecting that this is almost baked into the cake, and we're seeing it across the board with the stock markets as well. The VIX, so the volatility index, has been bouncing around underneath the cautious bull level in the bull market zone. Remember, this is something that I've talked about on the channel going back many, many years now to 2022. Watching the volatility of the market as it comes down, you're seeing the S&P 500 rise. Any of these spikes are basically very sharp short-term lows in the bull market so far. So basically climbing the wall of worry. And as it climbs into this zone between 11 and 17, you basically got this steady grind to the upside for a considerable amount of time, because nothing lasts forever. We can see that. That was with the yen carry trade, and then the tariffs spiked, and now we're basically dropping back into this zone. So things are just continuing to churn as they typically do. We saw a new all-time high in Japan. So for their stock market, another new all-time high, 44,000 points. We've seen a few new all-time highs now over the last couple of years after they hadn't put in a new all-time high for 35 years. And if you're in Canada, new all-time highs as well. This just keeps running and running and running. I think there is still further to go for this cycle, as I've been pointing out many, many times. According to the 18-year cycle, there is still further to go. Land prices, we're seeing some of the shaky points here for the economy, but there's still further in terms of the cycle and the stock markets, and it might even drag, as we can see, Bitcoin along with it. The US dollar has begun to push lower here. It hasn't necessarily broken down just yet. It's getting very close to doing that again. The next level we're watching is 96.9, and should this continue to break down, generally what happens is it's a little bit of an easier time for those assets to climb higher. Which assets? Generally your metals. We're seeing gold day after day, new all-time high, new all-time high, new all-time high today, nearly $3,700 an ounce. Silver, which we've been discussing on the channel at length underneath these sort of videos here, multi-year bull markets, also hitting new fresh highs in the last 24 hours, now $42.35 an ounce. That's a 14-year high, and it looks like it's going to break. Well, look, that's my position anyway. I think it's going to break into new all-time highs. I don't know exactly when, but that's what I'm banking on, new all-time highs for silver. But we'll obviously know if this is not going to work, because you have to have a position ready should it break down. If it starts to come back into this zone where it was consolidating between roughly $30 and $35, that is not going to be a great thing for silver in the longer term. It might just need more time to grind and consolidate. It's not there at the moment, hitting $42 an ounce while you've got the US dollar coming down. And I think that could just be a matter of time over this quarter, quarter three, and then the early part of quarter four for Bitcoin to find its low and then start to push higher, as we've been covering here with the cycle, the composite cycle analysis, 2020, 2015, somewhere September, maybe a higher low here for early October before things start to get running again. And then we can start to watch for some of these price targets to the upside. So heaps coming up. Like and subscribe if you're new to the channel. Otherwise, let me know in the comments section when you were following the channel, what year from. It's always interesting hearing about those as well. And of course, the reports coming out this week. So check those out, and I'll see you guys back here at the next video. Till then, take care and peace out.